Hello everyone. The last few days in the market have been really fast, and I hope most of you were able to survive this volatility. For those of you who did lose money on this move up, there's still plenty of time to recoup those losses and make profits. We're just getting started, and I have some good plans that I'll be sharing in this video. And by the end of it, you should have a clear idea of where we currently stand and what we can expect next. So let's get into it from the lower time frame where we left off in the last market update video. We were tracking this wave count where I expected wave 2 to complete somewhere around this 62.3k region, followed by wave 3 pushing into the mid 70ks. And that played out pretty much perfectly. In fact, we pushed a little higher than where I was initially expecting wave 3 to complete. And now we're rejecting from this previous monthly fair value gap here. I personally think there's a good chance we complete wave 3 below the previous highs around 82.8k region. This makes sense because a lot of people will be positioning around those previous highs, and front running that level will be a perfect bait for late longs and also for those who are waiting for a sweep of those highs so they can trigger into a short position. So for now, I believe we are inside wave 4 on the lower time frame. And ideally, I would like to see wave 4 complete around this 0.382 down to this 0.5 fib region, where we also have some imbalance waiting to be filled. Whenever we get a strong one-sided impulse like this one, we generally tend to see a relatively shallow retracement or a flat pullback before continuation. We usually don't see massive or sharp pullbacks which immediately retrace the entire move. It's not usual after a dominant move like this one. So as long as we can hold this 0.32 and 0.5 fib pocket, I think the structure remains pretty clean for continuation higher into wave 5. For wave 5, I'm targeting this red box which sits around 82.8k up to 84.6k. This is where wave 5 should ideally complete. Now wave 5 can obviously extend higher. There's even a possibility of it tapping 93.6k, where we have the shaved top on the weekly. But I'll be playing this level to level, so that's why the first point of interest for me is this red box, then the second one is this yearly open level, and then the final one is this shaved head on the weekly which sits at 93.6k. Now the wave count which we are currently tracking is a lower degree wave count. Once we complete the wave 5 on this count, we will basically mark wave 1 of the higher degree wave count. Let me show you what I mean using some historical price action. If you go back to the previous bull run, we can see a 5-wave impulse starting from the bear market bottom, with wave 5 eventually ending up at the bull market top. And this general structure is something which we have seen across all the previous bull markets. We tend to move up in these obvious 5-wave structures. And the blue count here is our higher degree or the external wave count, while the red count is the internal wave count or the lower degree wave count. So basically inside the higher degree wave count, we have lower degree wave counts. And once the lower degree wave count completes, it marks the first wave of the higher degree wave count. So the count which we just discussed on the current price action will basically complete our lower degree count, and ultimately it will mark the wave 1 of the higher degree count or the bull market count for a better terminology. Once we mark this wave 1 of this higher degree count, I expect us to enter some sort of larger range inside wave 2. This range can potentially last all the way into the March of next year, and that wouldn't be unusual because a long period of consolidation is exactly what we have seen historically after a bear market bottom has formed. So wave 2 could end up being a pretty boring phase, and I expect us to range around or below this yearly open level at 87.6k. I don't expect us to reclaim this level, but if we do reclaim it, then that would change things quite significantly, because remember, we already retraced around 30% of the entire bear market move in less than 50 days. This entire pump took like 49 days and we have already retraced more than 30% of the entire bear market dump. right? So the timing is definitely unusual. The momentum is changing, the timing is changing. We bottom before Q4, and if the traditional cycle timing is already changing, then there is a possibility that the behavior and timing of these larger impulses could also change as well. I'm not going to deep dive into wave 3 and wave 5 of this external degree count because those moves are likely at least a year away, and there's really no point of trying to map out every detail that far in advance. I just wanted to give you guys a heads up on what I'm expecting for the bigger picture. In terms of trades, I'm looking to long wave 4 and short wave 5. Those are going to be my intraday setups. For my next major swing position, I'm mainly interested in longing this higher time frame wave 2 and then riding that into the wave 3 extension next year. That's pretty much what I'm looking at right now. Things can change as price develops, but this is the framework I'm working with at the moment. I hope this update helps and answers some of the questions you guys might have had about this recent price action. Have a great rest of the weekend, and I'll catch you guys in the next one.